Hi, good morning, good afternoon, good evening to everyone. This is Amy from Amy Kang Metaphysics and also Coffee with Amy Kang. So right now today I have a interesting guest who is coming to share with us about her views about investment trading. And before I start, I'm going to just take a while to introduce to you about what I'm doing. Okay, so basically, I'm a mental health advocate and I share about my recovery journey as a person living with a mental health condition. And now I have get in touch with metaphysics, and now I start to grow and become better as a person practicing metaphysics. So now I do Facebook Live to want to encourage people to come and learn from all the guest speakers that I have invited to come and learn from their expertise, and also hopefully that it can help to inspire some of us here. So for those of you who are inside the Facebook Live, I welcome you to say hello to us, and at the same time, if you can, please help me to like and share my Facebook Live. So tonight we're going to have one of my guest speaker to come and share about investment and also about the trading psychology behind this investment. And okay, so without further ado, I'm going to introduce to you all my guest speaker. And okay, she is Kathlyn. Okay, okay, so Kathlyn Toh. Okay, so Kathlyn is actually a professional trader and investor um, who has earned her wealth from investing and trading in the US and global financial market. She's also very passionate about bringing out the best in people and is a strong advocate of personal mastery. She has 30 years of trading experience, and she started her stock trading journey in the Bursa Malaysia stock market way back in 1993 and the US stock market in 1997. Since then, she has traded actively in stocks, options, CFD, currencies, futures, and global indices. She has great deal of understanding in global macro factors that affect businesses, and also she have great insight about into many industry trends and supply chain dependency from her research and experience investing in many companies, as well as from her 17 years experience working in the semiconductor industry, AMD and Intel. So there are so much that we can learn from her. And one thing that I like to share with you all here today is one of Kathlyn favorite quote. Okay, so okay, so maybe I'll share it later. So Kathlyn, are you there? If you are ready, we're going to have Kathlyn to come in and come to have a formal hello to everyone. Yeah. Hi,
Hi everyone.
Kathlyn.
Yes, hi everyone. Good evening. Can you hear me?
Yes, I can hear you loud and clear. Yeah. So actually, this is the Kathlyn seldom actually participate in Facebook Live. She actually mentioned to me that she prefer more of the Zoom experience where she can see people face to face, online. So I think
I,
this is a big breakthrough for her, and we really
I,
welcome
I,
her.
do, I do Facebook Live. It's just that I do have Facebook Live to my students before, but it's just that I prefer see people face to face. Yeah.
Ah,
So
okay,
normally when
okay.
we do Facebook Lives, we use Zoom to live stream to Facebook Live. So those who can join Zoom, then they can still interact with me. Yeah.
Okay,
Yeah.
sure. So let's welcome Kathlyn to share with us about her expertise in investing and trading. And Kathlyn, how you like to maybe you can share with us more about your insight in this area?
Uh, yes, actually, before I proceed, right, I'd like to
Mm,
know what is the experience level of the audience here, so I can tailor my presentation. Because this is not for me to just share what I want to share, but more towards like how I can address some of the questions that you all have, right? Yeah, because I
okay.
only have 1 hour. I want to make sure I address your concern. Right, what is your perception about the stock market, and what do you really want to find out? Okay. Uh, so and also I don't see whether the link are published, because when I go to your
Oh
Facebook page,
yeah.
see
Oh really? Okay.
yeah, yeah.
Let me
How do
let me get it done now.
Yeah, otherwise people won't be. But I see since
Be
few
aware, right?
months and April, you got it from her Facebook page, or
Yeah,
because
how
when
do
I
you
go
all
to your
get Florence and April, how do you all get to my link? Is it from the Facebook page? So I also trying to figure out. Thanks for mentioning, Kathleen.
yeah, because otherwise people have no way to join. Yeah.
Okay, got it. I will try to take a look at my Facebook page now. Do you all see it from my Amy Kang Metaphysics Facebook page or from my personal? Yeah, I saw it on my. Okay, this Amy Kang Metaphysics.
Yeah, because as I scroll down, I don't see the link. Yeah, so it should be promised to start. Yeah.
Yeah, let me share it onto my story also.
Yeah.
Sure.
On your and on your page. I don't see it on your page.
Okay.
Yeah.
Sure.
Okay, because I would like to have as many audience so I can because it's to serve mainly. Yeah.
Okay.
Otherwise, I'm not sure whether I'm addressing the right topics. Yeah.
Okay.
Okay. So for those of you who are here, I see Florence and April. Right? Anyone else? So just type a hi if there's anyone else here. Okay.
Oh, Florence got a notification. Thanks, Florence.
Yeah.
Okay, I share to my story. I'm going to share to my page.
Okay, so for Florence and April, what are you looking for? Right? Have you already started investing or trading, or you have not started yet? Yeah, just type on the chat. Yeah. Yeah, can you hear me? Florence
Yeah,
and
I can
April.
hear you.
Yeah, because I don't see what they type. Yeah. I don't see anything that was typed on the response here.
Please help me to share, like and share to your friends if you can. And I also trying to share to my group now the link so that they can actually tune into it directly. Thank you for that.
So is there anything specific that you're looking for, April and Florence? Right, what do you want to find out? Yeah, so I can actually adjust my presentation accordingly. I'm a very flexible presenter. I'm not the type that very rigid. I have things I cannot change it. Yeah, I'm very flexible. Yeah. So most important is to address your needs and concerns. Yeah, I don't qualify. I don't like to give tips, just in case you are asking for tips, because tips are very dangerous. If you don't know how to invest and trade properly, tips are very dangerous because you don't know how to get out. Yeah? There's no 100% sure gain in the stock market.
Yes, that's right.
Yeah. Okay. No response. What about April? Are you have you invested or traded so far? Yeah, April Lee. Yeah. Okay. If not, I will just proceed. I like it to be more interactive because then right, I feel that I'm serving someone. Yeah. Otherwise, it's just me presenting a topic which I'm not sure whether it's really what you want to listen to. Okay. Yeah. All right. So I guess it's not reaching a lot of audience, right? That's why we have so few here.
Yes, that's right.
I
Sorry
see that
about it. Yeah.
Okay.
Okay, I try to share to my group also.
Mm-hmm. So would you like me to just start or want to wait for a while?
Okay, maybe just wait for a while more.
Okay. Yeah, well, during that time, I would like, April and Florence, since you're already here, just type anything specific that you would like to know about, yeah, in respect to investing and trading. I've traded for 30 years, so I've gone through the various up and down different market cycles. So I hope I can help you address, some of your concerns about getting into investment and trading, right? Yeah. So if you have not started, what is holding you back? I'd like to know. I wish I can see your face so I can be more interactive. Okay, don't just be a passive listener. You're here to learn, right? So don't make the best use of your 1 hour session here.
I think we can start lah. I
Okay.
will hopefully that the people will stream in. Sorry about the turnout.
Yeah. No, I think it's very important to market it properly, right? So that it can really reach more people. Yeah. Okay. All right.
Yeah.
Yes, Florence, good. You meet me in March, right? So anything specific that you want to find out? At least I have one response, right? Then I can tailor it. Yeah.
Thank you so much.
Okay, so anyway, if no response, I'll just share what I think is important. I would prefer that April and Florence, if you can tell me if you have not started investing and trading, right? What is holding you back so that I can help to inspire you? Okay. I have certain objective of this session, but it may not. I'm not sure whether it align with you. Right? I really want to increase the awareness of investing and trading. Okay, yeah, and because not enough people are doing it, and it's not easy to build wealth or even overcome inflation if you don't invest and trade. Right, this is my honest feeling about it, and that's the reason why I'm still doing this. Okay, otherwise I'll just be a trader. Okay, yeah, it's not so much easier than starting a business on education. Okay? Just to give you some context, right? I have been a full-time trader since 2008, okay, where I left my full-time job. Before that, I started trading in 93, right? Malaysia market, then moved to US stock market. So now we have an education company called Beyond Insights, and we have already have 5,500 graduates, right? 15 years, this is our 15-year anniversary. It will be our celebration. Also my 25th year wedding anniversary. Okay.
Wow, congratulations.
Yeah. So this is just to give you confidence because not everyone may know me here, right? There's a lot of scam in the market, right? So it's very important to give the assurance that we are not a scam, right? So we are proper education company approved by Malaysian authorities. In fact, we got an award on Malaysia Influential Educators from the Malaysia Tindakan Pengguna, right? The Consumer Association of Malaysia. Okay. So for your
in fact, actually, Kathlyn is a very experienced investor. So take this very good opportunity to come and ask a question that you may have regarding investing. Don't be shy,
Yeah, don't be shy. I can entertain even very beginner question. Right? Don't be shy.
Then I will ask.
Not by my experience level. I'm here to serve you. Right? You can ask very beginner questions. You don't understand any jargons here, feel free to ask, right? Because in our class also we have more than 50% beginners, right? Totally haven't traded before, right? They come to our class, so I can understand that.
Yeah. I saw one question from Forrest about how do you invest in this turbulence time, but maybe you like to address later on now.
Yeah, it's very interesting because we had an invest fair last weekend. It was organized by the Singapore organization, a share investor. They have it in Singapore and Malaysia. So it was just over last weekend in Mid Valley. And so I have a 240 minutes presentation, right? So I'm extracting one of it to share here. So one of my topic is how to be a versatile investor and trader despite challenging market conditions, right? So it's probably going to address Florence's question, right? How to invest in turbulent time. The first day I was presenting on the market updates, how the global market is and why there's still opportunity, right? How can you ride the long-term trend while take care of the short-term volatility? Like it's two different aspects of the presentation. But I think for this audience, what I understand from Amy, so could be for more of a beginners, right? So I'm going to share this in more layman terms. Yeah. Feel free to stop me if there's any parts that you need to clarify. Okay, don't worry about that. Before I move on, right, I just want to give you the bigger picture of the overall stock market performance. It's also inspire you why it's important to learn about investing. Okay, otherwise you would have missed a big opportunity to build your wealth, right? So this is we cannot evaluate market performance in 1 year, right? 1 year could be a bad year, like last year was a bad year, but it doesn't mean you cannot make money. I will elaborate on that. So we look at overall 10 years performance, and I would like to compare the major markets, right? The first one is Nasdaq.
Kathlyn, you haven't shared the slides.
Oh, I haven't shared the slide. Oh, sorry. I thought I had been sharing just now. Could have tell me earlier? Okay.
Sorry about it.
I think I.
Okay, let's see.
Okay, just hold on.
Okay, sure.
Sorry about that. I thought I've been sharing entire screen from this. Yes. Okay.
Okay. Yeah. Okay.
Right. Now, can you see?
Yes. Yes. Thank you.
Apologize. Yeah. Okay. So didn't realize you all cannot see this. Okay.
Yeah.
We have been. This was my last presentation in this Success Resources seminar. Yeah. Okay. This was the one I was talking about, the Persatuan Pengguna, right? As a consumer association. Yeah. This is the presentation title I just did in InvestFair, how to be a versatile investor and trader despite challenging time. I think a lot of people are turned off, right? They worry the market is volatile, so they don't they don't dare to trade in the stock market, right? Worried about risk. So I'm going to address a lot of this perception and can you build confidence and not too scared off with all the risks out there, because that's a way to manage risk systematically. Okay. So I'm going to share with you this stock market performance I mentioned just now. Sorry, I didn't realize I didn't show the slide just now. So we need to evaluate the stock market based on 10-year performance. So I'm going to compare here. I primarily trade the US stock market plus global indices, even though I started trading way back in 93 when I started with Malaysia market first. Yeah, and I will share with you why I decided to focus on US market. One of its performance, you can see. The first line here is the performance of Nasdaq 100, right? So I'm not sure how familiar every one of you is on these terms. I will explain it in more layman terms. In US, there is 3 major stock exchange, right? The best performance usually come from Nasdaq. Nasdaq consists of mainly technology companies, although there are some non-tech companies there as well. They select 100 out of the 1,000 over companies listed in the Nasdaq, and the returns is 384%. That means the average performance of these 100 stocks. So what is inside there? There could Microsoft, Apple, Google, Amazon, right? They're all in this, including Tesla. So per year is 38.4, right? Don't you think 38.4 returns on a basket of stock is considered very good already? Right? Just imagine if you have invested way back, not even 10 years ago, even 5 years ago, you get very good returns already. Okay. Then the next one is S&P 500. Okay, S&P 500 is the index used to measure the US overall performance, right? Because Nasdaq are more tech-centric, technology-centric. So S&P 500 select 500 stocks to represent the 6,000 over stock in the US stock market. Okay? So the returns has been 157%, right? 15.7. It's still pretty good performance, right? Compared to putting your money in the fixed deposit. Before the last year dip, right, it was averaging 20%, yeah, which was very good. Before this dip over here. Yeah. So then the next one, a lot of people will compare to China. They always ask me, oh, why not China? They think, oh, China is the next major growth area, right? But China market is not performing well. Yeah, you can see the green color here, right? The performance based on my arrow here, right, is actually flat to down. In fact, it has been bearish. Yeah, because China economic growth has been slowing down. Yeah, it's actually very slow recovery. Even after they open up post-pandemic, they removed the lockdown, right? The lockdown actually has been very, very costly for China. Okay, because of the lockdown, a lot of factories, the MNC from US decided to move out some of the factories to Vietnam and Southeast Asia so that they can diversify and they are not so impacted if there's future case like this. Also because of the US-China tension. Okay, and due to that, right, even though they open up the from the COVID lockdown, the economic recovery is pretty slow because less employment right now. Okay, even though travel is improving, but overall there's youth unemployment. Okay, so we expect the China recovery to be quite slow. The next one is Hang Seng Index, which a lot of people ask me as well, like Tencent share, should they buy and so on. Hang Seng, right, Hong Kong index and China are correlated, right? So because they are a lot of their main customer from China, so it's also underperforming, negative, right? And let's look at the, I didn't put Singapore here, yeah, because this is a new engagement. I could have put SGX, but I can show you from the chart later. So any one of you invested in a Singapore stock so far?
No, not me. I'm totally new in investing, and I hope to learn some entering tricks from you.
Yeah, I saw Florence question. Do you run a school to teach investment? Yes. Later I will share with you more what I do. Yeah. Okay. So this is Bursa Malaysia. It's an index called KLCI Composite Index, right? It choose 30 stocks to represent the 1,000 overstock in Singapore. In Malaysia. Okay, so suddenly I saw the word Singapore that changed my sentence. Yeah,
Because you teach in KL, right? But you teach online, right?
I actually have teach 2 batches before, way long time ago. That was during when Success Resources invite me to teach in Singapore. Yeah, but because of bandwidth, we were focusing on Malaysia. But we have online session, online classes. So in fact, we have quite a number of Singapore students who attend our course online. Yeah, some fly to KL. Yeah. Okay. So in fact, I have a coach in Singapore as well. So FTSE Malaysia, unfortunately, back home in Malaysia, is underperforming at 2.2%, mainly because of the foreign funds moving away due to our currency has dropped significantly. The other is political stability and the economic growth. One more reasons why Malaysian market not performing well is also the relative performance, right? Let's say if you have money, right, and you're a fund manager, let's say fund manager or individual, where will you put your money? Right, you will put your money in the country that give you the best performance. Make sense?
Yeah.
Right. And because of that, right, Malaysia may not be the first choice for them. Okay, not even the second for now, until there's a turnaround for the Malaysia economy, right? Or they have more confidence on the politics side. Yeah.
Yeah.
Yeah. So as you can see here, right, that's the reason why I focus on the US market. But sometimes people have fear, right? You can see the stock market doesn't go up in a straight line, right? It has up over here, then it has down, then it goes up. Then people worry, oh, what if it comes down like that and I bought at the wrong time, right? So that is don't know how to get in and get out, right? So a lot of people, they advocate something called value investing. You buy and hold, then you don't interfere with it. I don't believe in that. It's not my preference. I'm not saying that value investing don't work, but a lot of people don't use it properly, right? In order to practice value investing, right, means if you want to follow, you must follow exactly. Some people, they don't follow fully, because value investing require a lot of patience. Means you go by the value of the company. You only want to buy when there's an extreme discount. And extreme discount comes in when there's a big market dip, like last year, right? It's like over here, right? This is where the big discount is. Over here. This is the 2020 COVID-19 crisis, okay? Or the 2008 US financial crisis, okay? So only during crisis time, you have a huge discount. And when you buy, yes, of course, you need to make sure it's the right companies, right? That can sustain for a long time. Okay? Then only you can use the value investing method. But majority of the time, stocks are not that cheap. When it's not that cheap, you need to know when to get out, right? Even Warren Buffett has got out from certain shares before, like certain company. It doesn't mean he don't get out at all, but he used fundamental to get out when there's certain change in the company where it will affect their future, right? For example, let's say you don't cut loss in PayPal, right? PayPal was doing well, at one time, and it was really underperforming for a long time, right? Because the competition has kicked in. So especially technology stocks, right? You cannot just buy and forget, okay? Yeah. So because technology changed very fast, right? So if they are no longer relevant, then the stock the stock will not do well, right? So you need to make sure that you know when to get out. And the easiest way to get out is looking at the stock chart, rather than evaluating a lot of fundamentals. So especially for beginners, easiest way to get out is using the stock chart. So I'm more a growth investor. That means I focus on strong profitability and growth stock. I'm not those like speculator. When it comes to high potential stock, but they are not they are not profitable yet, but they have a strong future growth. Those are called emerging growth stocks, right? Those are higher risk. I will use options to trade it because there's a limited risk way to trade those. But I advocate, right, especially for beginners, to start with companies that are already profitable and are still growing. And you will not find that they are very cheap all the time, okay? Because in a 10 years period, right, let's say from 2020 until last year, right, is the shorter cycle. We have 2 dips, right? In the history, right, normally only 10 to 20 years once you have a big market correction. Big market correction means 30 to 50% down. Okay, otherwise it's just called pullback, like pullback 10%. Okay, those are not called market crisis. So majority of time, when the stock is trending well, you will pay a premium for it. Okay, but when there's a major market dynamics change, you need to know when to get out, right? Later, I will give some example. So that's the first thing you need to understand. Investing doesn't mean, right, you buy and then you forget, okay, wait until 5-10 years later, right? You need to learn the right time to get in. No matter how great the company is, right, you need to get out. Right?
I see.
Because later on, I will share with you what actually moves the stock price. Yeah.
Okay.
So that you will understand better.
Thank you.
Yeah. So the other part is when people see chart like this, especially over again, they have a lot of fear, right? Yeah, because they don't understand what causes this. And you can see, right? This one I think a lot of people can appreciate because it's the COVID-19, right? So a lot of business is affected. So naturally, the stock market will come down, right? Because business are affected. However, if you look at it, the COVID-19 crisis haven't recovered, but the stock has gone up so much, right? Even the tech stock and S&P 500. Why? Because when people are locked down at home, right? Yeah, the tech stocks are doing better. You need to buy laptops, right? You need to collaboration tools, right? So like Microsoft has all these so you need to buy laptop, and when you buy laptop, you need the operating system like Microsoft or Apple. Then you need the collaboration tools like all these Zoom, web meetings, like Teams, Microsoft Teams to collaborate. And you need to use what we call a cloud service. Cloud service may be technical to some of you. Cloud service means your application is hosted on somewhere central. Okay, so nothing is on your desktop. You can consider a web-based application. So that become more pervasive. Yeah, because people work remotely, but they still want to sync up on the data, right? So cloud computing become very popular. So now people are hosting that. In the past, right, during my earlier days in Intel, when I was working in Intel, everything needs to be installed on your laptop. Okay, so now one of the big trend is cloud computing. That means everything hosted on a server, and this hosting, a lot of them are with either Microsoft, they have a cloud service, Amazon, they also have the Amazon Web Service, or Google, right? Google also have their Google hosting. So these three companies also are doing well during this period. Okay, so tech stock actually boom a lot. But on top of that, one of the main reasons for the boom is because the central bank want to recover the economy, right? Recover the consumer spending. So they introduce a lot of money supply to the market, right? In the layman term called printing money. So what do you mean by printing money? So you just see it as there's a way for the Federal Reserve to pump in more money to the market using bonds, right? You don't have to understand about bonds. Bonds are a bit technical, right? So when they pump in so much money to the economy, so especially to the banks, so what do they use it? Right? They actually, instead of loaning out to more people, they actually invest in the stock market. So the stock market went up a lot. Just imagine, right? During the previous crisis before this was the big one, is the US financial crisis way back in 2008. Okay, that was when I left Intel, my full-time job.
Lehman Brothers, is it?
Yeah. So there's so a lot of dip. So this was the big dip, and that time the government, the Federal Reserve only introduced 700 billion, right, to salvage to recover the economy. Guess how much is introduced here during this time? Over here, U.S. government, U.S. government as well as the Federal Reserve, right, added more than $8 trillion here. So relative to 7, right, and the European Central Bank, 8 trillion plus. Then there's a Swiss National Bank, Japanese Central Bank. All of them has introduced a lot of money. In total, more than over here, more than $26 trillion.
Wow, that's a lot of money.
How can the stock market not go up? Understand?
Yeah.
Understand this, right? The big money is in the money supply. The big money. So I have an advanced course called Macro Insights, which I teach about monetary policy. Right. So if you understand the big picture, that is where you can invest with confidence. Yeah. But if you don't understand, you have fear. Well, after COVID-19, like so many shopping malls closed down and so on, right, you have a lot of fear. So one of the important part you may want to write down is this: you cannot look at what is happening to time the market. Okay, because the stock market is 6 to 9 months ahead of the economy. Okay, why? When you invest now, right, you only make money when the stock recovers, isn't it? So, but you don't wait until the economy recover to buy it. The time everyone know is good, right? Everyone is confident, so the stock price will be high. Professional invest when the times are bad, like end of last year to this year, because only in bad times the price are depressed. but cannot be too early, right? So they are looking at within 6 to 9 months. If they see a recovery, then they will buy now. Okay, within 6 to 9 months. So then when is the economy recovering, right? Based on the GDP projection, next year is when the economy is recovering. Okay, sometime next year. So no one can accurately predict whether it's beginning of the year, mid or end of the year. But middle of the year is a high probability. So then when is the best time to invest then? Right? What do you think? If next year economy is recovering, this year is still bad, when is the best time to invest? What do you think?
I think now.
Yeah, it will be now. In fact, it's a bit late. So it will be beginning of this year. So depend on the depend on the sector. You see, some of the sector is already overly penalized. That's where the big funds will come and buy already. They don't wait for things to be like totally rosy, right? That will be too late. So, however, this is very against the typical human nature, right? So a lot of people will look at, oh, it's scary, right? Wow, the economy is so uncertain. Wow, so many tech stock retrenched, so many tech company retrenching people. Microsoft retrenched 10,000, Google 10,000, Facebook, Meta retrenched 30,000 people.
Wow.
Then you will get, okay, yeah, they will say, oh, will it impact the year? But people don't understand. When they retrench, usually stock go up. Why? They cut costs, improve profit margin. Okay, they already factor in the recession. Right? They already factor in end of the year recession, and they already take care that they will have lower sales, but they cut costs so they can still maintain the profit. Okay,
I see.
So that's why you will have more confidence if you understand the stock market properly, and you will know that stock market cannot go up all the time. Right? There will be a point in time where they will become overly expensive. Right? So over here is because the Federal Reserve were doing what we call a easing policy, right? That means they are introducing more money into the market and they want to activate the economy. So until the point in time where too much money in the market can cause price to go up, right? So it becomes high inflation. High inflation is not good for the economy, right? Because just imagine if like UK is having more than 10% inflation. In fact, it went as high as 13% last year, right? Just imagine the price of goods going up more than 10% every year. It will become very unaffordable, especially for the low to mid-income group, right? Yeah, so the central government will need to control this. So how do they control? They have to do the opposite of what they do earlier, which is called tightening. From easing here, this is called easing, to here tightening. So what is tightening? They just do the opposite. They reduce the money supply, okay? And they increase interest rate. So earlier they reduce interest rate. When they reduce interest rate, it become more affordable for people to borrow housing loan and car loan and so on, right? Or business loan. But now they tighten. So last year, from 0.25% interest initially in the US, right? It has gone to 5.25% now. Okay, so the increase of 5% within just a 1 year plus, right? So that's called tightening. So during the end of November last year, 2021, they already announced this, right? That they will be tightening, right? So all the big funds, they are very savvy. They know tightening is bad for market, so they start to sell, right? But if you understand this is a cycle, then you know that you need to sell. And it's also in stock market, you can also trade down. You don't only need to trade up, right? So first, you know this, you can cut loss, right? I won't say cut loss, you will have taken profit here, okay? You make money here, you take profit. Or if you don't understand that, at least you know the market turn, there's a technical analysis here. Okay, you see that it has U-turn. There's a way to detect turning point here. From uptrend to downtrend, you get up here, right? You get up. Then you take your profit. Then you wait for the market to recover if you are new, right? Or you stay in cash, right? Or you can trade down. During that period, you can do short-term trading. Yeah, short-term trading if you learn short-term trading. So you don't have to be scared about all this, right? People worry, oh, market crash, right? So market is very volatile. That is only because if you don't know how to get up. So after that, you need to learn the trend reversal, how to get back in. Like, so there is technical signal. Technical signal is the simplest for beginner. You just look at chart pattern. We teach people exactly how to look at the turning point. Yeah, it's not like a rocket science. You just need to learn some simple patterns. Then you will be able to get back in here. But you know there's the bottom already. And this is the recovery. This is a more confirmed recovery here. Okay, this is then you can get back in, yeah, to the stock. And this is for the overall. This chart is the Nasdaq 100, but for specific stock, some of them already rallied a lot. Okay, so Yeah, so this is the part where you don't have to worry about market going down. In fact, the market going down last year was very good for investor because otherwise it's very hard to invest, right? Everything is so elevated, expensive. Right? It's good for traders, but not good for investor. It's only after this big dip, a lot of the stocks are cheaper, right? Then you can get back in for investment because investment is more passive. The other
I have
reasons,
another question. Okay.
go ahead. Yeah.
What's the difference between traders and investors?
Later, I will share with you. Investor
Okay.
in general are more long term. That means when you invest, right, you are looking at the at least 3 years and beyond. That I want to stay on this company. You are evaluating, you are making money from the fundamental growth of the company. Whereas traders, you take advantage of the stock price pattern to get in and out. That's called trading.
And in the chat, Foreign and Darren also have the same question for you about whether do you use I Ching like divination for your decision making? Do you like to take your point
no.
of view?
Yeah, I don't. Yeah, so I use it more for my business. Equal divination. Yeah.
Okay.
But I would avoid my Rock Wealth Day, right? Basically, there's a top and bottom Rock Wealth. Those are the days that I have looked at some of the statistics, although it's not very comprehensive. Those days usually are not so good.
Yeah, even though either top or bottom up.
Both. Yeah.
Both. Okay.
Both will be the one that is more. The rest of it you can't avoid, right? Because I'm also active trader. You cannot be avoiding all the days. I've seen like some Rock Wealth Day also I can make money. But at least if is there's something called like for example, I'm a Jiaxu, right? So if it's a Yi Mao, right? Yi Mao, right? That's the worst day. Okay. Yeah.
Oh, I'm a Yi Mao Year.
Okay, opposite. Yeah. Yi-Guan is more used in the business. But when it comes to the Rock Wealth Day or even just Yi on top, right, I'm more cautious. But I don't look at the calendar day all the time, right? So for me, right, most important there's heaven, man, and earth, right? So the man component is very important. You want to equip yourself with the skills, right? Then the rest is the icing, right? You can leverage on the heaven's luck, okay, for the timing, right? So like timing in terms of date selection, right? The other one is if I launch, that's why I say I use it more for business. When we have events, okay, then we'll use that. But you see, if I go to invest, I cannot select the date. I cannot select the direction, the stage also, right? You understand? I cannot select which sector I'm standing. I cannot select the where I'm facing because the stage is like that. You cannot always looking that side, right? So how do you convince people? You have to use your skill. Okay. Yeah. So I think that don't overly depending on the heaven's luck. Okay. When you can use it, you use it. But your skill is very important. You cannot be lucky all the time. When you're not so lucky, you use your skill. Your skill is very important. Right? And even though luck is there, but you are not prepared, you don't know how to invest and trade, you will not be able to use it. Right? Like I can see certain months is my wealth day, right? Yeah, wealth month, right? Then I can see, okay, I capitalize on that. Okay, I will trade more. Okay. Yeah, the Rock Wealth month, okay, I'll be more cautious. Okay, so that's how I use it, but I don't pick like day by day or today or what timing. That would be too much already. I cannot concentrate on the stock chart anymore. Because when we buy, we look at the stock chart to get out, right? So you cannot time like, today, let's say you see a good turning point, but let's say it's not a good day, doesn't mean you don't buy. It's also not right.
That's true.
So we have a stop loss protection. Okay, yeah. So there's a limited risk to trade it as well. Yeah. So I always believe that you need to equip with the man luck first. Okay, yeah. Which is you equip yourself. Earth, which is a feng shui, right? You can use it to enhance, but I'm not over paranoid on that. I don't go and just do like unnecessary major renovation. When convenient, I use it. Yeah.
Yeah. Did you want to address Darren this question also?
Yeah. I don't use I Ching to
about the personal views.
Unless I have because sometimes it's very abstract, not easy to go and interpret I attempted to, but it's just too abstract to interpret. Yeah.
Abstract, yeah. And what is your personal views toward the crypto space in comparison with stock market? Do you like to take a look at this?
Yeah, that is another 1 hour presentation.
Okay.
Okay, so I can share my point of view on that in a brief one. Okay.
Yeah, sure.
Let me finish this.
Yeah.
I can address those questions towards the end, if you don't mind, right? So that
yeah, can. As long as you get enough time to
otherwise,
go for your trading.
people may not, yeah, sometimes otherwise people may not be able to follow the flow. Okay.
Yeah, sure.
Yeah. So being the question first, I will address it later on.
Okay.
Yeah, I get asked on this a lot anyway. In fact, I have a course on the how to look at the various instruments and which one is best. Yeah. Okay. So in general, the essence of what I want to portray here is, if people don't invest, right, then they actually miss out. You see, investing is about, okay, there's investing and trading. Investing is about finding great companies, right, at a reasonable price, and let the company work for you instead of you work. Okay, many of the tech stock, for example, Microsoft, Google, Meta, right, which is Facebook, their return of investment per year, that means for every dollar invested in the company, they are making more than 20 cents profit. Some of them even 30 over cents, some of them 40 over cents for every dollar in the company. Isn't it very profitable?
Yes.
It's better than for you to start your own company even, right? Yeah. For example, if every dollar they make 20 cents, means 20% return rate. That's very conservative, right, for a tech stock. Yeah. So over 5 years, it will be 100%. That means your stock price can double in 5 years. Right? For example, ROE, return of equity. You can see as for every dollar invested in the company, right, how much are they returning? Right? All these can be available in the financial reports. Okay. So over 5 years, right, it will be 100% return. That means if you invest in company like Microsoft right now, over 5 years, right, you are just finding the great companies, right? And the company, everyone in Microsoft working hard for you, or Apple and so on. Isn't it a great feeling? Yes. Rather than hard yourself. So that's why I think everyone must learn how to invest. Okay. Yeah. Trading is a choice. Okay. Trading is a choice if you want to compound your money faster. But investing is important. Even when we run our own companies, right, it may not be as profitable as those, right? Yeah, it's a lot of hard work as well. Okay. So that's the essence.
Yeah. Okay, so like say if I totally know nothing about investing and I want to invest it, how can I know that I'm doing the right thing?
First, you need to have a process, right? Everything that we do is well thought of. I'm a I'm a detailed thinker, very logical. So everything I do, I have a why to increase the success rate. I think we are the only company that has a process map, very systematic. I will share with you later on.
Sure,
okay,
thanks.
So before I move on, I have this slide, which is why everyone must invest, which is based on financial plan. Yeah, we do this in our 3-hour webinar. Now I only have 1 hour. But I'd like to know, are all of you convinced yet that investing is a must, or is it a shoot to you? Otherwise, I may just skip this slide.
Yeah. To me, I think it's a must. Because I heard your presentation on this previously, but I think that is really a must to do investment. Like it's really to protect our dollars.
Yeah, so I will go through this really fast. Normally, I will do it more interactive. I ask you like how much do you need for your monthly expenses? Okay, so because I think if you are already convinced, I don't want to spend time on this, so I can cover the rest. But I can go through express pace. Or I encourage you to go to our 3-hour version, so it is slower.
Okay? Yeah. For those who are here who like to learn more, can go for Kathlyn 3-hour sessions. Later she will share the link.
Yeah, we will share this. And I think a lot of people don't realize how critical. You may think that everyone must invest, right? If you look at you miss out a lot of gains if you don't invest, but you don't know what will happen if you don't. Okay, so I will just briefly cover this, right? I'm just working at that time, 10,000 ringgit, right, per month if you need for living expenses with a buffer, right? Assuming you have a house, you have a car that you need to pay, and probably some travels, but not luxury yet, right? Sometimes 10,000 may not be enough if you need to have your children education. So based on this is 3 million, right? Because I have until this is when I work out for my for my financial plan. Okay, so you need 12,500 ringgit a month. Of course, Singapore will be different. Okay, and this one without inflation, with inflation is 40,000 that you need. What kind of pay do you need to have in order to save this much, right? So I will skip this part, but I encourage you to go to our 3-hour webinar, because this will help you to really understand why it's a must, not just conceptually it's a must. And you need to work out your actual amount so you know you have a base to work on. Yeah. Otherwise, you think that maybe I start investing next year, and every year you waste this number will become more and more. Okay, yeah. What if after 55? Now Malaysia already moved to 60 years old retirement, right? Yeah, probably the government knows 55 not enough. So what if at 60 you don't have new income, right? Yeah, of course some of you have metaphysics consulting income. So let me share with you, right? So knowing that investing is a must, or some of you like trading, let's say. Later I will show you the trading part. How do you approach it? This is where it's a very different shader for us. Like we have a company called Beyond Insights Investment and Trading Education. There are a lot of providers out there. I'm sure Singapore has a lot as well. But what differentiates us is we have the most systematic approach. And how does this systematic approach come about? Is because I come from Intel. Okay, Intel is a very systematic company. I worked in the semiconductor for 17 years, 5 years with AMD, 12 years in Intel. And I was an automation developer when I first started. All the way before I left, I was the automation manager. I managed 102 people for Intel across the APAC region, working on factory automation. Yeah, how to automate the Intel supply chain management as well. Yeah, working on an SAP project and the warehouse management. So I understand the semiconductor pretty well. I can probably draw the whole flow. Okay. Okay. So what I gained from Intel is the benefit of a structured process for repeatability. Right. So when we introduce something to the factory floor, we need to train the operator, right? And we need to make sure the process is repeatable, right? And there's a systematic training so that our manufacturing yield, right? That means if you put in 100 units, you want to have high success rate coming out. Okay. Without a documented process, it's very hard to repeat. Okay. But you see, is that the way a lot of people trade? What do you think? A lot of people, when they trade, they don't actually have a systematic process, right? It will they look at what company do I want to buy? Usually they start from the company that they know or the industry that they know. There's no structured process all the way from gut feeling. Or even those who have traded before, is actually not a very structured process. So later on I will share with you what is a structured process, right? So we have a SVS framework. First, you need a systematic process. And before that, you need to know whether you are long-term, mid-term, short-term, or intraday. If you don't know, then you will mix up the entry-exit rules, right? The second one is you need to be versatile. There's no one-size-fits-all, right? There are certain market conditions suitable for investor. Certain part is suitable for trading, and not all trading styles are suitable in all market conditions. For example, there are times where there's too much announcement, right? Last year especially, because it's very sensitive to inflation numbers, every week there's some inflation related number. Okay, yeah, whether it's retail sales or some economic indicators or we call it CPI, consumer price index. So all these economic indicators will affect whether central bank will raise interest rate more aggressively or slower. Even until now, the central bank are looking at the inflation economic indicator to see whether they want to raise interest rate next month. So when this come out, right, during the initial stage where it's not stable yet, you don't really understand whether the central bank will raise or not raise or by how much. It can cost, like, it could be 2 days up, 2 days down. Okay, so during those periods, it's better that you stay up, right? You don't trade things overnight. So that's where intraday will become more important. Okay, so it's called versatility. I will explain the different style later. Then the next one is, no matter what you do, there's not going to be 100% success rate. Okay, longer term investment has high success rate, but doesn't mean you take it for granted. You still need to cut loss when you need to. A lot of people, they buy top growth stock and never get out, and now they're back to square one or below, okay, underwater. Okay, so but when you trade short-term trading, there's a lot of noise in the market because there are millions of traders in the market. Not everyone will think the same way. Okay, because if everyone think the same way, there will be no market. Okay, there'll be no market because everyone will be buy. Who's going to sell to them? The market exists because people have different opinion. Okay, yeah. Some will think it go up, some will think it come down. Right? Otherwise, why one buy, one sell, right? So due to this, it will create market noise because there are long-term people, long-term investor will think differently from mid-term to short-term to intraday traders, right? That intraday means you buy and sell within the day. And also there will be announcement, economic announcement that can change the direction, like the Russian-Ukraine war, COVID-19. There's something you cannot predict. Let's say you do everything right today, you follow the process, tomorrow announce war. Is it your fault? Right? So you still need to cut loss when it's needed. And it's better to let the system do the job for you than for you to do it. Because when you do it, it's emotional, right? People don't like to cut loss. Okay, so you default moment you enter, you set a cut loss point. Okay, so and all this requires psychology to follow. Okay, so I would say that trading well is opposite to typical human nature. Opposite. Okay, why do I say that? That's why it's not easy to trade well. Okay, unless you can think opposite. That's why I create a lot of awareness on psychology. My most passionate course is psychology bootcamp on trading. Yeah, because I can give you a systematic process, but you may not want to follow, because most people prefer open the laptop, look at the chart, and trade impromptu. Okay, it feels more fun. It feels like the game, right? The second one is people only use one or two trading style, right? Gut feeling, and people don't like to follow money management. They said, "Wow, Nvidia is so bullish, right? Why do I restrict myself to 1% risk? I should have buy 10%, 50% of my account. Then when something goes wrong, right, or Nvidia CEO get into trouble, okay, go into a plane and something happen, like touch wood, then your stock will be in trouble." Right? I think I've traded for 30 years, so I know a lot of Murphy law can happen. Right? So you never expose too much. But people get greedy. No matter what I say, they may not follow. Understand? But if you can, then you can repeat the success. So the bottom line is still the psychology, right? For those of you who have not started, is this psychology holding you back, right? The fear of being wrong. Okay.
Yeah.
So that's why I said we have a very complete framework, because after trading for so long, I understand what psychology I have to go through, and we teach for 15 years. We understand what's holding back student. So we want to make sure that we covered all the bases so that they have the highest chance of success. Okay, so let's look at because we want sustainable success. You can make money in a few months, in a year, or even in a few trades, right? But can you repeat the success, right? So you need to be able to repeat so that you can really gradually grow your account. Okay, so I'm going to cover briefly on here. This is a more advanced topic. What impacts stock price, right? Why is it that we must cut loss no matter how great the company is when the bigger picture change? Because 40% of the stock price what is it affected by? 40% of the stock price is actually the bigger market sentiment. And what affect the bigger market sentiment is the macro factor. What is macro factor? Example that I mentioned earlier, the money supply. Now the central bank tightening or easing. That's the most important part. If you understand this part, you will be able to write the big money, right? So we have an advanced course called Macro Insights, which we cover the biggest market mover, the monetary policy, the government policy, right? Then how the asset rotate between when they move from stocks to bonds to the risk asset type like crypto and so on, right? And when within the stock market, when they rotate between the different sector, sometimes like last year from growth stocks go to the consumer staples, because risky environment, they sell all the high growth stocks, then they go into the conservative stock. And this year is the other way around, right? So that's called sector. But I won't delve into detail. But if you understand that, then you will be at the advanced level. You can write the big trend with confidence. Like the second part is the industry trend. Right? So for example, now there's a lot of talk on AI. You can see a lot of the AI stock went up together with Nvidia, right? So that's the industry insight. If you miss Nvidia, what can you trade? So we have an industry dependency, semiconductor, right? Fortunately, I work in semicon, so we were able to develop the entire semiconductor. So if you miss Nvidia, doesn't matter. You can go and buy related stock in AI, right? AMD, or you can buy the supplier for Nvidia, like TSMC, or the equipment supplier for TSMC, right? There's a whole chain of opportunity. Then you know what is the big wave, right? For example, the AI, big data, cashless payment, right? So then you pick the best stock within the industry, okay, the one that will prevail, right? So some of you are asking, like, how do we take care of the volatile market? So depend on whether you're an investor or trader. If you're an investor, right, the volatile market this year is actually an advantage, provided you invest in something that has high success of going up, because next year is the PC market recovery. Why? A lot of people buy PC or the laptops, right, during the pandemic time, 2020. But next year, how long do you think people will refresh their laptop?
5 years.
4 years, 5 years. Depend on people. It could be 3 to 5 years. Like some company laptop will be higher. So next year is the 4th year already. So there's still a high inventory for the PC market in Q3, right? It needs another quarter to clear. Then only they can clear the inventory, because I follow up with all this. So in Q4, it can start to grow back. But people don't wait until then to buy. You can see a lot of the stock already turned around. Microsoft, AMD already turned around because people understand the worst is already factored in beginning of this year. Okay, people. So as long as all the worst news, bad news already penalized, reflected in the stock, then they will come and buy already. And now we can see it's already elevated. So in anticipation of next year recovery, right? That's the industry insight. And the last one is the company insight. But where does most people start? People start at company level. That's why they miss the big picture. They thought, oh, I have such a great stock. Why do I need to cut? Last year, if you have Apple is a great company. If you don't cut, you will lose 30 to 50%. Okay, so that's the part that people are missing. So I'm a tops-down person. So because after trading so long, I can see how many big trends I missed during my early days without understanding this. But as a beginner, you don't want to overwhelm them. So we still start beginner by understanding the company first, right? And we give them a watch list, and I do market updates, right? So they don't have to learn the first two parts first. And as they go along, they can take it, then we have a course to teach them on that. Okay, so most beginners will need to start from company first, right, before they go to the rest. Because we're gonna watch this. Okay, this one is the more suitable one for this market sentiment, right? Yeah. So then, so that's the context on why we call ourselves systematic, right? We have a rationale behind everything that we do. Then at the next one is how do you at the company level, how do you analyze? Let's say you're an investor. What is the process for investing? It's different from you are doing mid-term or short-term, right? There are 4 trading styles I will share. So this is the one. We blurred it out because of IP protection. We have something called a freedom model, and this one stands for, the freedom, FREEDOM. Yeah. So we start from systematically how to shortlist the stock. We have 10 criteria, right, to shortlist the best stock from the 6,000. For example, the profitability, growth, and sustainability. After we shortlist, we have a handful of 30 stocks, let's say. We look at the 10 years track record. Okay. Then we look at the valuation. Right. Then we look at the stock chart. Yeah, stock chart to see whether it's the right time to buy. We use fundamental and technical. So every of these steps, we teach them in the class, and then we put it into one cheat sheet. So they can just follow this process. It's very easy to follow because it's all step by step, like a recipe. Okay. Yeah, we put it in one page so that they don't have to be overwhelmed. Right? Then when it's the left-hand side is for swing trading. Yeah, this is for swing trading, and this is for trend trading. Yeah, this is for investing at the center. I have a testimonial here, but I won't run through it. Yeah, so if you go through our 3-hour manual, it will show. They can see that our student actually put it at the back. Yeah, this testimonial testify that it's very easy to follow.
How do you feel about the problem?
Yeah, sorry, I will skip it. Yeah, the next one is versatility. You can see that market condition change, so you want to make sure that you have different style to take care of different conditions. So there are actually 4 different trading styles. One is long-term growth investing. One is short-term swing, trend, and intraday. Why do you need 4 styles? First one, to suit different market sentiment. Second one, to suit your lifestyle. Right? Sometimes you can be very busy. At least you do investment, less time needed. When you're when you have more time, then you can actually do intraday trading. Okay, where you can sit down about 2-3 hours, then you just close everything, no exposure overnight. It's good for volatile environment. Okay, so let me share with you why how this is applied. This is a chart that I actually selected from 2020. This is the COVID-19 pandemic. So when the crisis is good for collecting stocks for investing, right? So there was also another pullback here in September 2020. Right, this is good time for investing. Investing means you wait for long-term growth, like planting a mango or durian tree. Okay. It's short-term trading, like swing trading, is you take advantage of the chart pattern. So let's say you see, oh, the market is going range bound, right? So you can trade from here to here, right? Buy here, sell there, right? Then buy here, sell here, buy here, sell here, until it break out. Then there's another pattern, okay, to trade. There's another pattern to trade, right? This is range bound, called swing trading. Swing trading means like this. But when the market start to trend, like this year, right, start to trend, then you do trend trading. You don't base the trend to go in and out. Right, trend trading is more like if you have 1 hour a week to 2 hours a week, you can still do trend trading. Right, it just take about half an hour to make a decisions on the stock. Yeah. So I mean, on 10 stocks, you can just take half an hour. Yeah, because it just take 1 minute to look at whether there's something to do for each chart. So this is trend trading. When the stock start to move, then it's called riding the big wave. Right, you continue to keep it until the trend change. This is called trend change. Then you get out. Okay. So this is sideways chart again. And when you break, you can also choose to trade downtrend if you want to, or you stay out until the market go back up again. Okay, your preference. Yeah, trading down is more tricky than trading up. So when you know this few trading style, you will know which one to use for the current market or the particular stock. You don't force fit, the wrong trading style to it. Right? And also it's a personal preference, right? Whether you have time commitment, like swing trading require half an hour to 1 hour a day. Trend trading, you don't have to be there every day. You may just miss some trend if you're not that active, right? Otherwise, it's the least effort compared to, number one, least effort is investing. Second one is trend, then followed by swing. I also do intra trading, right? When there's uncertainty, but it's also my favorite style because no positions overnight. Just to give it a feel, left-hand side is the daily chart, right? One bar is 1 day. Yeah? Green means go up, red means come down. This one is 3-minute chart. If you have not traded, this could be a bit advanced for you, right? So let's say right now, I just give a scenario. Normally, I prepare about half an hour to 1 hour before market open, okay? But when I just trade the same stock, I only need half an hour. Okay, so I need to end this fast. 9:30 p.m. market open. I already know what I want to trade because I will look at the pattern before this, right? Let's say I already plan. I'm going to plan for a breakout for this stock, okay? Where I will cover this one, round number 230, just to give you a feel. I'm looking for breakout patterns here. So now I'm going to enter here. So then I'm going to get out when the market turn here. Could not break resistance, so I get out here. So something like this. Yeah, so I have certain things that I will look for as an entry and exit. So within one night, I don't have to keep any positions overnight. Let me clear this part. So I erase this first. So I forgot I have the animation. Right. This itself help me to gain, is $3. So depend on the account size. If you can buy 100 units, $3 is already $300 gain in how long? Right, this get out is by 11 p.m. So I can close shop already. I don't have to stay overnight. A lot of people thought trade US market means don't have to sleep. Yeah, so get out already. And when your account size become bigger, it become more significant, right? So you will add. So instead of 100 units of share, you can buy 1,000 when your account size have one more zero. So this trade itself, right, in one night will become $3,000 for you. It will be people's 1 month pay. Okay.
Yeah.
How many like to make your 1 month pay in one night? Okay, cool. And if your account become bigger, it will be the same trade. You don't have the extra effort, right? Your account is bigger, then this single trade will become 30,000.
Wow.
That's how you can trade for a living. But of course, you start small first, right?
Yeah.
Okay, so and this total duration only 1.5 hours. Sometimes it takes 30 minutes when the market move fast. Then you can get out. Okay? So this is, you can also trade down. This is my trading zoom down. It's a smaller size because that day the market is volatile, right? So I short here. That means sell and then buy back here. So this whole trade only take 15 minutes and make 1,662 by just buying 200. This is not my usual trade size. I trade between 2,000 to 5,000 shares usually. So when you buy 2,000, right, one more zero, this will be 16,000 already. In 15 minutes, you can close it, then you can close shop, or you can choose another stock to trade. Up to you, right? That's intraday. And this is actually for the different trading style, what is the gain? Provided, right, there's a learning curve, of course, but it's not impossible, right? So as long as you can complete, depend on the trading styles, if you're going for intraday, it's better that you trade 100 paper trades before you go live, right? If it's a swing and trend, 25 trades before you go live. So make sure that you are disciplined. Okay, when you're disciplined and experienced, then this is possible. Okay, so this one is explained further because I run out of time. If you're interested, we explain this more in our 3-hour webinar. I don't want to rush this. So with, right, you can see that it's feasible to trade for a living. Right, I'm trading for a living, right? I can show you. I don't have time here, but if you join the 3-hour webinar, I actually show my results over there. Yeah.
Yeah.
So this is the one we start beginners with, right? I'm already using the conservative compound. So if you use 20% per annum for investing, your 10,000 capital will become 61. Yeah, you don't have to start with 10,000, right? 2,000 is good enough to start the US market. And if you do swing trading, you do 4 trades half right, you get 2% per month. 1 year is 24%. If you do trend trading, the conservative side is 30% per year. Okay, if you do intraday, if you only trade 10 days, because 1 day you can trade 1 trade. In fact, 1 month you can do 20 trades. But if you only do half of the month, you already can get 60%. Okay, by being half right only. Half right you can get 5% per month. Okay, so but of course you need to go through the learning curve for this. But based on this, right, is it worth it to learn?
Yes.
Right? Yeah. Like so, this is the part, and I'm going to sum it up. Right. So people are saying, then where should you learn it from? Of course, there are many schools out there, but I can guarantee you, we are the most systematic in the market. Okay. Yeah. That's why we actually won this award. We early last year, we actually won this best brand, not early last year, beginning of this year, 2022-23, best brand in curriculum and coaching for stock market investing and trading. And this is from top 10 Asia. Yeah. We've got many other awards, like InvestFair. We have got the preferred financial educator for 3 consecutive years. Yeah, nominated by the people who attend. We are also SME 100, small and medium-sized enterprise 100 company. So we actually have 2 things that if you are curious, or which style suits you more. Even though we said it's better to learn a few styles, it's also important for you to know what resonates you, right? Everyone has different personality, different time commitment. Right? So if you are curious, then you can scan this QR code. Right? It's a simple 3 to 5 minute survey on it, right? Because we have a more comprehensive one in our psychology bootcamp to know the more suitable one. But that's too long for you to do. That one will take more than half an hour. But this one asks you based on the simple way to match. Pacing is the most important. How do you know you're suitable for, let's say, intraday? Is you like fast-paced stuff. For example, you like ping pong, right? You like table tennis, you like badminton, fast-paced activity. Investing, you're patient, right? For example, you like to trim bonsai, plantation, you like to play golf, right? So it's pretty interesting. You can scan it. There are other dimensions other than pacing. Then okay, my primary is what? Then you will focus on building your primary. Then you have a secondary standby in case the market is not conducive for your primary trading style. You have another one. For example, your primary could be, let's say, investing or trend. But when market is volatile, you want to stay doing intraday first. Okay, something like that. But intraday is not your core because you don't spend 1 to 2 hours every night. So when the market stabilizes, then okay, you go back to your core style. Like so, that's how you use it. But at least you know what is your core. Yeah, sorry, this is an InvestFair, so I can go to the booth after they scan. Then they go to the booth, then we can explain to them. The other one is if you want to join our 3-hour webinar, it's free. We educate people more. I'm rushing here, like the select, time, protect, and multiply concept, and also the financial planning part. Okay, and also we introduce an instrument called CFD, how to make investing more affordable. Right. So this one is another website. You can scan this, and it will go to our website. Okay. Then so how can we help you? Right. In this seminar, what do we cover? We share the process of how selecting, timing, protecting, and multiply. So after you attend this, you will find that you will build up your confidence in the stock market. That is not so fearful because we have a good way to manage the risk. We'll explain the concept on trading as a business, how trading can be a business, how you can trade living that. Okay, and use the leverage instrument safety, like CFD, bring down the cost. Instead of paying full price, you pay only 1/3 of the stock price. Like so, it makes trading more affordable. Right, this is covered in our 3-hour webinar. Like so, you can. Like so, I hope this is so. The I end it with this page, right? Quite a number of people who attend our free webinar, right? They actually ask me this question. Even existing students who just signed up during the first class, they will ask me, "What do I do with my top growth stock?" Top growth is a very popular for Malaysian investor. So what happened is they go and buy early, right? Or even some buy later. Then they could make a lot of money here, but they don't get out. So as the right, they don't cut loss. Go down, they don't cut loss. Some even words they call averaging down, which is something we don't do at all, right? That means on the way down, they keep buying, adding to the risk. And now here, it's so low already. People, how to cut? But it's down so low. Okay, you cannot think like that, right? So if you think like that, you can never be consistent, right? So our goal is to change this mindset on what is the systematic way. The moment you get in, you must know how you will get out. Should not be an afterthought. So many fundamentals have changed here already. The reasons stock growth go down so much. In fact, if you look at the fundamentals, stock growth already losing money. Right, last 2 quarters already lose money. Okay, yeah. China growth is cheaper than Malaysia growth right now. How are they going to be competitive in the future? But people can't let emotion. They still hung off to that. Like they could have cut this and find a better stock that has a high profitability and growth. That stock itself can recover the loss here, but cannot do that. They feel they don't want to be wrong, right? They have this regret. They just want to make sure that this one become positive, right? So those are the psychology part that need to be addressed. That's why we actually have an advanced course on Master Trader Bootcamp, just to rewire people to become a successful trader. They wire them to be a professional master trader. The way most people think is very difficult to follow the money management, especially when they are long-term investor in Malaysia market. I can tell you, I rather prefer green people. Haven't traded before, no bad habits is even better. Okay, those with bad habits don't want to cut loss. It's harder to rewire, right? That's why we create this boot camp for them to change the way they think. Okay? Why they have to have a stop loss, how to rewire the way they think about cutting loss. Right? We go deep down because I'm also trained in psychology. So I've got advanced psychology course from the Tony Robbins, all the way to the advanced leadership, where he teach the intervention skills and NLP master practitioner and master coaching. Yeah. So that's why I say, to be a great investor and trader, consistent, you need to understand your personal psychology as well. Like, so our course is very complete. Without psychology, I don't think it's complete. Okay. So this is how I can share with you. Now, I think I just want to answer quickly on that crypto question before we end. What's my personal view of crypto, right? For crypto, you need to understand that nobody gave it the fundamental value, right? So stocks, you have fundamental. I can evaluate, okay, this value is considered cheap or expensive. But for crypto, it's very difficult, right? Crypto valuation is based on trust, based on the belief on it that the future value will rise. Whether it can become a replacement, whether it can become a medium of exchange. Now there's already pockets of usage of it, right? You can use it to buy stuff. But because the valuation, the value of crypto fluctuates so much, it's not easy to become a medium for payment on a big scale. Okay? And the central bank doesn't like it, right? So, the central bank doesn't like crypto because it's not regulated. And I'm not saying that it's not the right investment. It's for sophisticated investor or trader, right? You can trade it or invest in it, provided you understand it. First, you need to understand how it works, right? We have a course called Financial Market Multiverse, right? It's a 2 days, half day, pretty cheap course just to introduce all the different asset type and instrument, understand the characteristic, the pro and cons, so you know the pro and cons before you get into it. But it's not enough to trade. That's just an overview course. So for this crypto, right? One of the main things that you need to be aware. First, you need to invest with the money you can afford to lose out. Okay, not more than 10% of your account. Okay, not suitable for beginners. Okay, unless you really go and understand it first. Does it has high potential growth in the future? It's hard to say. The potential is there. Okay, but you need to make sure that you don't chase after it. Now it's called a crypto winter. Okay, the bad times for it. But you need to be watch out. There's a lot of scam out there. Even the exchange sometimes is a scam. Okay, yeah. So there's already enough story. I don't have time to share here. So if you want to go into it, you need to learn how to protect your crypto first. Right? You need to have an offline wallet. Right? So that's what I can say. It's for sophisticated investor. Prepared for the money you can afford to lose. If it's a small part of your account, that's fine. Right? It's about high risk, high return. Okay, and look at the stock chart when it's suitable when there's a risk on. Okay, risk on, there's a concept called risk on and risk off in the market. When there's a risk off, or when US dollar strengthen, crypto will go down. There's a high correlation between US dollar and crypto. Okay, if you understand it, you can go for it. Just don't put all your account there. Why I prefer stock market? Stock market consists of great companies, right? Of course you select the great company and they are bad company. Great companies like Microsoft, Apple. This is not an advocate to buy tonight. You need to learn it properly. Okay, they are well run, they are profitable and consistent, right? So the predictability is there compared to crypto, right? We don't know what is going to be introduced in the future, right? It's something that is not solid compared to a company. Company will exist, okay? If you don't invest in Apple, there'll be other great companies to invest also. But crypto, there are like 9,000 over coins, and a lot of the coins are scam. Okay, yeah. So that's all I want to say about this. I hope that helps. Okay? Yeah. So any other quick questions I can address, because the market is going to open in 15 minutes. Okay? I'm preparing for my trading. Yeah. Any major questions from Amy that you think I should address?
I think I'm interested to know about the boot camp. How long is that boot camp?
The boot camp normally is only for our own students that have because we actually subsidize the boot camp. Yeah. So yeah.
So
it's
let's say as a beginner
the
like me,
bootcamp
if I
4 days online and 3.5 days offsite. Yeah, we
oh
rewire the way you think. But I will prefer people who trade first. Then when you come to the bootcamp, you will appreciate more. Is
I
to
see.
overcome all the the bad habits of not cutting loss, not discipline, and so on. Yeah, and to
Yeah,
prepare them with the mindset of a master trader. And in that bootcamp, we actually cover the 20-year market cycle. Right. So if I share with you a 20 market chart, what I've gone through, right? That's why you need to do it. It doesn't help, right? But we put you emotionally in it in the 20-year market cycle game, then it's very different. Yeah, we have 3 major, very big scale games. That's why we need to run in a hotel. Yeah, but we prefer that you have already traded first, right? Based on the deal trading style, also help you to match the best match trading style eventually.
Yeah, I think for a start, I will go for the 3 hours
Yeah.
webinar
I encourage
first.
you to, we have a seminar. Okay, actually tonight, concurrent with this session, there's one, but it's recorded. Because we can run it over and over, on and off, I will run live. So if you miss this one, then next week there's one. Yeah. So what you can do after you scan this, you should be able to see it. Another way is you go to our website. Yeah. So we have our website here. Like you can see, this is QQQ chart, Nasdaq 100, already recovered. Yeah, this is a weekly chart for investor, already recovering. This is our website, beyondinsights.net, not .com.net. Right. So this is the one where if you click on it, it will also do the survey on the trading style. On the top right here, you can see online seminar. Right. This one explains our systematic, versatile, safe format. Right. You click on the online seminar, then you can reserve the spot here. Then it will show you which are the next 2 days. Right. Like the next one is 17 June, 9:30 a.m. next Saturday.
Okay, 17 June.
So if you really cannot make it for this one, then you go for the following week. After, I think because today we just run one seminar, tomorrow or Friday they will show you the next one. Normally we will show 2 concurrent, so people can choose.
Okay.
Yeah, it's run once a week. Yeah, but the earlier you go for it, the better. Our next intake for our growth investing as well as swing and trend is in July. Yeah.
Okay.
Yeah. So the earlier you attend, then at least you know whether this is suitable for you. Yeah.
Thank you.
Okay.
Thank you for the great insight, and thank you for the great sharing also. Yeah.
Okay. Yeah. So I hope I addressed most of it. Yeah. Sorry, I need to leave because prepare market open, and I know that Amy did ask me, like, how do I apply metaphysics in it? So that could lead to another sharing because
yeah, sure.
For me to share how I apply for my business, right, versus the how I do date selections or the Chimen Yikwa, right, then I can share it separately. Right?
Yeah, I think that's great enough already. I really thank you so much for your time and energy. Thank you everyone for coming here. Have a nice day. Thank you so much. Thank you. Then go for the trading and okay, hot.
Okay, bye.
Okay, thank you. Bye bye everyone.
Yeah.
Huh?
Thanks for inviting, and thanks everyone for joining. Yeah.
Yeah, thank you everyone.
Do share with more people so they learn how to do it properly. A lot of people, they don't have the process and it becomes risky. Okay.
Yeah, if you find that this is a very good Facebook Live, you can share with your friend to understand more about investing for beginners.
Yeah. So Amy, you want to see whether there's a way to trim off the front, right? So I will tell people that they can start at what minutes. Yeah. Otherwise they may see that the first part, they may need to wait too long before the actual start.
Thank you so much. Thank you for
just tell them
tips.
At what minutes.
Okay, thank you so much, Kathlyn. Very helpful tips. Thank you.
All right. Thank you
everyone. Thank you, Darren. Bye bye. Bye, Florence. Bye.